Hey there, Wealth Press subscribers, viewers, traders, and investors. It's time for the weekly wrap-up, and I'm joined, as usual, by Roger Scott. Roger, how are you today?
I'm doing great. How are you, James?
I am doing well as well. Thank you for asking. Roger, I know that this is the time of 13F filings to make new discoveries as to new opportunities, and I'm curious as to what you're finding out this week.
Well, I'm glad you brought that up, James. This is actually interesting. I do this every quarter. And as you know, I take the fastest gaining hedge funds, and I like to see which stocks they're holding cumulatively in their top positions. This way, I get a really good picture of what they were holding going into the quarter and what they're buying. And believe it or not, now most of the time you'll find stocks like Amazon, Facebook. Those are the regulars. Although 2 quarters ago we didn't see them and they lagged the next quarter. So, but the bottom line is most of these stocks everyone's familiar with, but sometimes we'll find stocks in these reports that are not stocks that most people have heard of. And those are the stocks that you want to pay attention to. And let me tell you why. About a year ago, maybe a little more, a little less, I found C Limited this way. C Limited has gone up to, I think, 200 to 300% since that time. And it's still on the list. Another stock I found this way was Meli, Mercado Libre. I'm probably mispronouncing it, ticker symbol MELI. The stock went up over 1,000 points since we found it. But these things are a gold mine. So let me tell you what first of all, I'll go through what they're holding, and then I'll go through what they're buying. So this time, the Amazon, the Facebook, the Microsoft, those are the 3 top, which usually is the case. So that's telling us the large caps are still in play. 4th, Meli Libre is now 4th spot. Square, Shopify, JD, Visa, C Limited, Tesla, Salesforce, Netflix, Google, PayPal, MasterCard. Here's where things get interesting. Write this down, folks. And I've mentioned a few of these. Coupa Software, ticker symbol COUP. I did mention this stock before, probably on this show. That's a stock you want to write down. Another one, this one, now these 2 have never made it on the list, and these are completely brand new stocks, and I've never heard of these companies. Or I mean, as far as trading them. CoStar Group, CSGP. Next one is Sunrun, ticker symbol RUN. And finally, the last one we did talk about before, it's Pinduoduo, ticker symbol PDD. But these 2 are completely brand new. CoStar Group, CSGP, and Sunrun, ticker symbol RUN. Make a note of those stocks, folks. I'm not kidding. Now let's talk about what they're buying. That's what they were holding going into the quarter. Now let's talk about, and these are the fastest gaining hedge funds. I like to look at 5 of them to see what they're all holding in common. So this is what hedge funds are buying aggressively or holding aggressively right now. And I've never even talked about these 2 companies, Run and CSGP. So now, what are they buying now? Uber, Pinduoduo, Cloudflare. We talked about that. That's ticker symbol NET. Let's continue. Here's a new one for you. DoorDash, ticker symbol DASH, food delivery service. DoorDash, that's a new one. Next one, C Limited. We've talked about that. That's been on my list for a year. CrowdStrike, CRWD. We've talked about that several times. Meli, still on here. Still no sign of slowing down. Next one is new on this list. Illumina, ticker symbol ILMN. Illumina. Next one is Google. Next one, never made it on this list before. These are the ones you want to pay attention to. Bilibili, ticker symbol BILI. BILI. Sunrun again. So not only were they holding it, they're accumulating the stock aggressively. Ticker symbol RUN. Sunrun. So the surprises here are DoorDash, Bilibili, DoorDash ticker symbol DASH, Bilibili is BILI, Sunrun, and finally Liberty Broadband, ticker symbol LBRDK, Liberty Broadband. So there are some surprises here like Bilibili, Sunrun, DoorDash, Illumina, Liberty Broadband. And on the other list, we have Coupa Software, Pinduoduo, Sunrun, CoStar, and that's about it. But these are new on the list, and this is what funds are aggressively buying. Not just any funds, but the fastest growing funds over the last quarter.
Now, Roger, do these 13F filings expose purchases of short positions?
They do, but we don't really need those because they have to disclose short positions in real time based on, that's not a SEC filing. That's a position, that's something the exchange files. So
regulation show.
Yeah, that would show instantly. That has to be reported in real time, actually. And I don't track that here, but we could find that out. But it's better to just look at open interest on a cumulative basis, I find, for shorts. I don't find that finding the stocks because A, you don't know if they're shorting it or if they're liquidating it. It's hard to figure that part out too. And here we know exactly how many shares they're holding, what they're holding. But what I love about this is the cumulative effect of this. What this does is it brings my attention to stocks that may otherwise completely not be on my radar. The way I find stocks is I back into stocks. Sometimes I'll look at a chart and then I'll start looking at the fundamentals and all that other stuff. Sometimes I'll look at technicals or fundamentals. But that's how I don't have a direct okay, today I'm going to find new stocks to add to my portfolio. It just doesn't work that way. It's very organic. But what I find, this brings my attention to stocks and to names that I might otherwise never, ever have looked at. I had no idea what C Limited does. Now, if you ask a year later, when I brought up C Limited to my guys a year ago, they were like, what is the C Limited? Why should we buy it? What does it do? Well, Stanley Druckenmiller was holding C Limited in his fund last quarter. Now, C Limited is a fashionable stock, if you will, a growth stock that people buy. Melli is a very common stock. A year ago, people were like, Melli? Well, why would you want to buy Melli? And then it went up 1,000 points. Points, not percent, points. So I find that if more than a couple of funds, especially funds that are aggressively moving up, are holding a stock, then there's something to this stock that I need to focus on. That I'm missing.
So you find the funds that are appreciating in their own reported net asset value?
Yes, I find what I could do is this. It's a very simple formula. I go back 90 days and I find the top 5 fastest gaining hedge funds. All right, that's all. Then I look at their holdings in cumulative. I want to look what they're all holding in common. That's what I'm doing. What they're holding and what they were holding and what they're buying. And when I do that, usually you're not going to see a lot of surprises like Shopify, JD, Visa, Tesla, Salesforce. I mean, wow. I mean, what a brilliant discovery. The top funds are holding on Amazon, right? But here's the thing. 2 quarters ago, like Amazon, it was 7 times in the top 5 holding, okay? 2 quarters ago, Amazon was nowhere on the list. And then what happened? Amazon was lagging the market behind for the following 4 or 5 months. So this is really, if you know how to use these lists, you don't just Amazon's here, let's buy Amazon. That's not how it works. What you're seeing is you're kind of getting into the mind of the largest, fastest gaining hedge funds that are, and you're kind of seeing what are they looking? Are they looking at tech? Are they looking at real estate? Are they buying the blue chips? Are they focusing on the Amazon, Microsoft, and Facebooks or smaller stocks? And you find stocks that are completely off my radar. Now, my thing is this: five of the fastest gaining hedge funds were long Sunrun. I never heard of this stock before. I'm going to want to look into Sunrun. They've got a lot of money in research spending. I'm going to want to get in on this. I want to know what this Billy's doing. 2 of the fastest gaining hedge funds are in the top 5 position are holding this stock. You'll find that a year from now, probably 10 will. But the point is, this is a great way to expose yourself to new names and find stocks that you should be looking at. So you can't really look at this and try to mimic this. That's foolish. But you kind of have to look at it and kind of figure out how to use it. And the way I use it is it backs me into researching stocks. Now, for this weekend, I'm going to be doing a ton of research on Pinduoduo, and that's a stock I've already recommended. That's on my radar. But Sunrun, never. I've named, never came up. CoStar, don't know what they do. So Illumina, I've heard of it, traded it before, but many years ago. Now I'm going to give it another look, and it's confirming that the stocks that I'm looking at, like CrowdStrike, C Limited, Alphabet, are in fact in play. So it kind of gives me a confirmation and exposes me to new names like Liberty Broadband. That's a hot stock right now. I'm going to have to start looking at this stock. So believe it or not, this is a gold mine if you know how to use it the right way.
Wow, it sounds intriguing. So what does Sunrun do?
It's a solar. They provide solar panels for residential properties, only residential properties, and that's in play right now. Residential properties getting EV. Think about what just happened in Texas.
Yeah.
So solar energy, residential, bingo. And Pinduoduo. What does Pinduoduo do? They do.
What does Pinduoduo do?
Yeah, how does Pinduoduo do? I love the ticker symbol, Pinduoduo. And I've mentioned that stock several times. They're a tech company. They're a foreign tech company. And I told everyone this year, if you find something foreign and tech, that's a really good idea. Look at how many stocks on this list. Melli, that's a South American e-commerce site. C Limited, China and tech, cloud. So there's you could find Coupa Software, another cloud software, payment processors, PayPal and JD, Chinese e-commerce. So Square. So we see there's a lot of e-commerce, a lot of foreign, a lot of local e-commerce on this list. Well, that's what the big, fastest gaining hedge funds are buying right now. We may want to start looking at that. Anyway, the bottom line is, in my opinion, this is a gold mine, and if you know how to use this, it can serve you very, very well.
Fantastic. Awesome, Roger. So I've been curious now. I'm watching the $1.9 trillion stimulus package be lobbied for rather vociferously by President Biden across the country and across the political landscape, which strikes me that it's somewhat imminent, which will trigger more central bank printing by the other G7 economies. And I'm looking at the valuation across the board of the tech sector and thinking that it's looking awfully expensive.
It's, James, I couldn't agree with you more. On every possible level, on a fundamental level, on a sentiment level, even on Warren Buffett's valuation level, you're right. And not just the tech, smaller stocks too, but yes, largely tech. But here's the thing. Tech has completely reinvented itself over the last year and a half to 2 years. We're in a different environment. Technology, the value of tech now is probably double what it was 2 years ago. Think about where Zoom is now compared to 2 years ago, but think about real value in there. So you kind of have to look at these valuations with a big grain of salt, because a lot of these tech companies are now, you see, and you've heard me talk about this several times, and I'll explain to you where I'm going with this. Look at Amazon. Look at technology 30 years from now, 50 years, not from now, ago, and look at technology now. 50 years ago, consumer discretionary and tech were as divided could be. You were either a tech company, and when I said tech, you made mainframe computers like IBM, you were a tech company, or you were a consumer discretionary company. Maybe in the early 80s with like video games and things like that, tech started becoming more user-friendly, anywhere beyond radios and things like that. Maybe I'm missing something, where home stereo equipment. For the most part, there was a very clear division between technology and consumer goods. That line is completely being crossed. Now, most consumer goods, most toys, most things have chips in them. And this isn't going anywhere. The world is becoming more tech-driven. We're having a chip shortage right now. For the first time in history, Japan and Japan and Europe are getting into the semiconductor world, calling them the arms, the arms of the future, the arms race. I did a report on it Monday. Basically, the country that doesn't have semiconductors is now going to be the weakest one, not the one that doesn't have nuclear equipment. Because chips are driving our future. They're driving everything. Think about all the things that you could do 30, 40, 50, 60 years ago without chips, and think about the world now. I mean, dog collars have chips in them. Kids are going to soon have chips in them for tracking. I mean, everything has chips in them. And everything is using LCD screens. So there's a very big blurred line between technology and consumer goods. And I think technology is reinventing itself. And I think the COVID, which is still running and shaping the economy, which started a year ago, has changed the playing field and has showed the rest of the world that we just can't live without technology, and has reinforced this growth and this change that we're seeing. So yes, I do believe, I agree with you 100%. And I see exactly the same thing you're seeing. And yeah, I agree. America is taking a lot from its future. A lot from its future. No question about that. But at the same time, we can't live. Tech is becoming utilities. We can't live without it. Where would we be? I mean, I could make the argument that some cities could run without electricity for a few months or without heating, but they can't without Zoom. Or couldn't have without Zoom. I would venture to say that several large corporations would be out of business now if we didn't have communication devices like Zoom. So I think we have to look at the valuation metrics slightly differently, and we kind of have to look at everything with a big grain of salt, and kind of reevaluate what tech really is and what valuations are. Because tech is now proving to be as valuable as utility stocks, and it's only going to increase going into the future. So how do you put a price on that?
Mm-hmm. Yeah, that's apparently they're priceless.
I was, sorry to interrupt you, but a good point here. I was looking at Warren Buffett's portfolio yesterday. I was looking at the 13 Fs. So he has to report. He has obviously very large portfolios. And I looked at his stocks and I just shook my head. It was pitiful. I don't have the full list here, but it was like Chevron and it was like, I mean, it was the most beaten down stocks, the most boring stocks. And you think to yourself, really, this is what you're buying right now? Like, you're missing opportunities to make like most of these stocks were not in his portfolio. Again, I don't want to quote him because I don't remember, but I remember seeing Chevron and I was just like, oh my God, here we are again. Like, that stuff was great after a crash, but in this economy, this is what you're doing. It's like, dude, you're out of touch. He's completely out of touch with reality. But the reason he's buying those things is because those are the only things that fit his valuation matrix. So if we start looking at valuation, we're not gonna have any of these stocks, and these are stocks that are set to triple, quadruple. Just look at SE and look at Melly over the last year. I don't know what else to say, But so it's one of those things. We kind of have to look at this with a big grain of salt, in my opinion.
Right. Okay, great. Well, so then is it time for our viewers to be looking at some of those stocks you mentioned?
Yes,
I don't think of the 13 Fs.
Yes, I don't think it's a good time to buy these stocks right now. I think you could find better buying times. I think we should be mindful of the short-term momentum levels, the fact that NASDAQ is overbought. I think waiting till these stocks pull back to their, say, 50-day moving average, maybe 30-day moving average, even a 20-day exponential moving average may be good. I wouldn't be buying these stocks when they're moving parabolically. I would wait for a little pause. And don't look for too big of a pullback because you may not get it. The stocks that pull back the least during the pullback are showing the best relative strength. So you don't want to find the stock that's selling at the biggest discount to fair value. You want to find the stock that's selling at the biggest premium to fair value. Those are the stocks that are going to pull up. And that's a lesson that Warren Buffett still hasn't learned in over 50 years. And that's kind of, he keeps doing the same thing over and over again, and it used to work really well. But the problem is, once the market gets above a certain value point, there's just no good deals in his price range. So I'm not a Warren Buffett. I think Warren Buffett's strategy is the best strategy after a market falls out of bed. But till then, we have to be a little more realistic, and we have to be up to speed with what's moving the market now.
Sure. All right, let's leave it there for now, Roger. That's a great update as per usual. I'll look forward to seeing you at the roundtable next week. Thank you very much for joining me today.